This is Leo with RipCalc, and today is April 3rd, and so YIELDMAX has announced the distribution schedule and payout amounts for their individual stock funds. And so let's review this and see how all these funds are doing. So here we have the YIELDMAX page on our website, and we show the best performing and the worst performing funds, as well as the table of all the funds with their returns, total dividends in the past 12 months, total returns with DRIP, and all of that good stuff, as well as the underlying stock. And so we will have our dividend date updated to later today or tomorrow. So this is still not available on our website, but by the time you watch this, it should be available. But let's look at the schedule right now. So number one is TSLY, and they have a distribution of 68 cents, 68.5 cents, which I think is a little bit high. I think they're now eating into the cash reserves just to have above 50% distribution rate, which I don't think it's good. And I have some TSLY, but hopefully the price of Tesla goes up in the near future so we can recover some NAV and have a higher dividend. Okay, so next is OARK. So these tracks are K ETF from Cathy Wood, so 47 cents, about 45% distribution rate. APLY, which tracks Apple, not so good, 38 cents and 27% yield. NVDY, so NVIDIA has been one of the top performers, and as of today, if you look here, NVIDIA is still the top performer. Now yesterday CONY was the number one, but their price has dropped significantly because the price of Bitcoin is going down, as well as the underlying coin stock. Again, if we actually look at Bitcoin, so over here it was 66. If we look at the 5-day, so it was 71,000. Now it's sitting at 65 and change. So yeah, that's a big drop in Bitcoin. But anyway, going back to NVIDIA or NVDY, they're going to pay $2.61, and so that's a 107% yield, which is insane. So if you bought NVDY stock at the inception, you're sitting pretty well. Again, let's move this tab over here, so they're right next to each other. Yeah, so with NVIDIA you have already collected $10 dividends, and now it's going to be $13, almost over $13 in let's look at the fund itself. So this is NVDA, and we need NVDY. All right, so yeah, actually the crazy returns have only been happening the last couple months, and before that it was basically under $1. But yeah, since June, this is their first distribution in June, so in like 10 months you have collected $10. So that's a 50% return on of the dividends, 47% dividend of the initial price, and the yield is actually 140% total yield for the year. Okay, going back here. So APLY not so good. NVIDIA, NVDY, 107% yield. All right, next we have AMZY, tracks Amazon, and they're paying about 70 cents with a 35.5% yield. Not bad. I mean, like if you compare like the regular dividend stocks which pay you 3%, this is like 10 times more, which is insane. But and MZ, I don't think it actually have NAV erosion. I think it's still above $20. Yeah, 24 bucks. So you're doing great on both the price and the dividends, so not bad. I mean, not as great as one of these three guys, but we'll come back to that. Okay, PYPY, or which tracks Facebook or Meta, is paying $1.17 and giving you 61% return or yield. Now I actually just bought about 40 shares of PYPY in the last few days, and so this is nice. Okay, so next GOOY is paying 31 cents. So Google has never been a good performer among the YIELDMAX funds. If we look at GOOY, again, we haven't updated our dividend schedule here because our data is not available yet. It will be available later today or tomorrow. But if we look at GOOY, it's actually down for the year. you can see even with dividends it's down for the year. Actually, if we look at NVDY, if you reinvested your dividends from NVDY, you're sitting on 120% return with DRIP, 121% if you reinvested the dividends. So this is pretty nice in what, 10 months. What's the inception? So if the first dividend was in June, I think the inception was like in March, April of last year. So maybe May. So yeah, in less than a year, the return is 120% if you reinvested dividends. Now, of course, Nvidia stock has returned like 3 times that. But you never know. You never know with the stocks. So it's a really nice return in 1 year, nevertheless. Okay. So let's go. GOOY we looked at. It's down for the year, so this is not a great return, just 21%. NFLY, which tracks Netflix, 80.5 cents. Not bad. I also bought like, I don't know, 20 shares of NFLY. So 51% return, not bad. Pretty good. Could be better, but not bad at all. So let's look at NFLY. Where is it? Right here. So NFLY is sitting at $19. Let's take a look. So yeah, 25% return for the year, for the incomplete year. They started paying dividends in September. So it's better than last month. Okay, not as good as February, but still better. So this is going to trend up. And once we have the dividend updated, it's actually going to increase significantly over here. So the 6 months return, no, not 6, 8, like 7-8 months return is 40%. But once we update the dividends, it's actually going to be significantly higher. So not bad, NFLY. Okay, let's move on. Let's place this here. We look at CONY. Now I have CONY, and I actually have coin. I got some coin back at IPO days, and then I actually bought some shares a couple of years ago. It was the summer of I think 22. I wanted to sell, and I actually bought by mistake because the way Robinhood does it, when you go to trade, no, that's with options. But anyway, I bought by mistake 100 shares of coin at $75, and then also when it dropped to like 35, I was actually trading it in my different account because I didn't want to touch my main Robinhood account. So I traded. I bought some shares at 35, and then when it got up to 50, I was like, oh wow, 30% return or whatever, it was 40% return. So I sold. Should have kept. It was be like an 800% return by now, but you never know. Anyway, so I have some coin, and I actually do sell options on that, but I sell way out of the money, like 1 month out, way out of the money. So I don't collect a high premium, but I don't want to part ways with my coin option stock. So I collect a little bit of covered call premiums and trying to keep the stock. Okay, anyway, so CONY is paying $2.80, 79.5 cents, basically $2.80, which is insane. Its yield for the months is actually higher than NVIDIA. And once our database is updated, I think CONY will be the #1 again. Okay. Now the problem is we still don't have MSTY. For some reason, our data supplier still doesn't have MSTY, which tracks. So here's MSTY, and it's sitting at $42, and we'll, okay, since I'm talking about it, let's look at MSTY. They're going to pay basically $4.13, which is a lot less than I actually made from all the premiums and all the NAV. But you have to consider they sold some puts and calls, so basically they're synthetic, which is way above the current MSTR price. I think it's like in the 1800 range or even higher. So if MSTR, the underlying, is not going up, they might lose a big chunk of money on the synthetic. So they are distributing about 40% of their last month's earnings. Okay, and so yeah, so MSTY will become the #1 position over here because it's basically sitting at $42 and $4 dividend or distribution. They'll be sitting at #1. The SQY will be removed from the top 3 list, and that happens automatically. So once we have data on MSTY, it will be #1 performing fund. But anyway, so we were talking about CONY coin, $2.80, which is insane. Yeah, I'm sitting on CONY at $22. I haven't been buying once the price started going up. Hoping that it will drop a little bit, so I can increase my position. I will probably reinvest the dividend or distribution from the CONY. So yeah, it will be a higher price, but you know, not bad. So if we look at CONY, they have insane returns. Last month was $1.66, which was pretty good, but this month will be the best return. So the previous highest distribution was $2.69. This month it's $2.79. Okay, so it will be even higher. They've been paying since October, so 6 months will be 7 months of distributions, and their return is to date 119%. With the distribution it will be much higher, and annual return with drip is 267%. Again, it will be higher once the dividend is included. Yeah, this is pretty insane. They're sitting currently on 70% dividend yield. That's what's calculated here. This is incorrect because it actually calculates based on what the price was, and it's actually rising. This is a trailing yield curve. So it's once we have more than a year of data, this will be accurate. But for now, it is a little bit misrepresenting the number. And but basically, CONY current payment 120% yield, very nice. MSFO Microsoft, not bad, 73 cents. Let's see what the price of MSFO is currently. It is almost $23. Okay, so not super great, but not bad. 39% yield. Okay, then Disney is sitting on 68 cents distribution for the month and 36% yield. Now Disney is going to have like this huge vote for seats on the board from investors, and there's going to be a fight unless they reach some kind of deal. So the price of Disney stock might swing down or up a lot. So it's very volatile right now. So let's see what happens next month. XOMO, which tracks ExxonMobil. Now I have some Exxon stock, and you might watch my other videos. I'm actually selling covered calls on that myself, and I sold the May 17 call at $110, and right now Exxon is sitting at like 120. So if I don't roll my position, I'll not lose my shares because my cost is like $59, but yeah, 119. But I don't want to lose to part ways with my shares, so I will probably roll the call out in the future, and then once the price of ExxonMobil drops, I will basically buy back the call at a profit, and if not, I can just indefinitely roll this call options. Like I actually sold when I started doing ExxonMobil in like 2021, like late 2021. I sold a call at $80 and expiring January 24th, so it should have already expired, and so it was so high in the money. Right now that call is like $40. But I rolled it $5 up to 85. I even collected some premium and increased my strike price. Now it's way in the future, but I will collect the dividend. I don't want to part ways, so I will just like roll this out indefinitely. I want to collect the dividend. My cost basis is so low, I don't want to lose the stock. And if ExxonMobil drops to something like, I don't know, $50, $60, $70, that call will be worth nothing, so I can just buy it back at pennies on the dollar. And while the Exxon is high, I will just keep rolling it out. Now ExxonMobil has not been the best performing stock. It's barely positive, like 2% return on the year. So yeah, I don't own any XOMO or XOMO, and their distributions are pretty low. So yeah, not my favorite YIELDMAX fund, but I do own the underlying, and I sell calls, collect dividends. So if you want to watch that video, check out the video on my channel. Anyway, so move on. Next is JPMO, which is JP Morgan. Not bad, 65 cents basically, 35 and almost 36%. Distribution AMD, $1.11, which is very good. Let's look at MD. I even have it open here. Yeah, MD, it is not as good as last month's. Actually, yeah, last 3 months for MD were much better. But not bad. $1.11 is not bad. I have MD at about this price. I have a few shares. I also have the actual AMD stock at like $67, but I sold $100 call way in the future. This was when AMD was like $70. So right now I'm deep in the money, so I'm gonna lose my shares or I can just roll the options indefinitely. But I don't know. Maybe maybe it's like better to just get rid of them and whatever, take a small profit and move on. So the point is, don't sell long dated options on the way up when the market is going up. All right, next so yeah, 65% return on MD, which is nice. PYPY, which tracks PayPal, 46 cents. So this is lower than last month's. This is not a very good distribution for PayPal. Yeah, it's actually their lowest so far. It's unfortunate, but hopefully it picks up steam. It's still positive for the year, like 28% annual return and 13% with drip, 11.5%. But this is with price erosion. So the price went down actually by 4%, and the dividend makes up for the total return, but not very good. And the yield is only 30%. So SQY tracks Square, 64 cents and 32% yield. Not bad, not great. Again, currently with current data, SQY is the number 3 performing stock or ETF for YIELDMAX. Has a pretty good return, 51% for like 6-7 months, half a year. Yeah, 0.7 year, that's like 7 months, 8 months. And wow, it was like, why is this flat? I need to update the pricing data, unless it was like flat all along, no trades. But yeah, basically in October the action started, and so last month was 65 cents, and this month it is 64 cents. Even okay, not bad, not great. MRNY 78 cents, 45% return. AIYY, which tracks C3 AI stock, 73 cents and 60% return. Not bad. So actually very good, because AIYY is one of the worst after TSLY. It's one of the worst performing stock after TSLY. Okay, if we look here, it's been going down. Even with distributions, you're down like 16 to 18%. If you dripped, you're down more than if you just kept your dividend or distribution. But it's only paid like 4 distributions so far. Last month was $1.06, and this month it's actually only 72 cents. So yeah, not a best performing YIELDMAX fund. And finally, we already talked about MSTY, $4.13 and 120% return or yield. Yeah, crazy. All right, guys. So if you want to collect any of these dividends, you need to own this stock today, because tomorrow, on the 4th of April, you can no longer collect this month's distribution. So today, April 3rd, is the last day to collect it. But yeah, thanks for watching. Again, soon our database will update, and we'll have all of these numbers in our table, and it will recalculate all these returns, because these are dynamically generated. These are not fixed numbers. So all the returns and yields will be recalculated once we have updated database. And so I just wanted to quickly touch on the TSLY price action. So if you look at this page, Tesla has returned minus 38% in the last year and a half, basically. with dividends reinvested, and if you just kept the dividend, it has lost 30%. So that's pretty terrible. 61.5% price decline. It's horrible. But you know, like, I own TSLY, and yes, TSLY, and I am not selling because for me, yes, it's a like huge drop. I didn't buy at the IPO or whatever inception. I actually started buying somewhere in August, DCAing and whatnot, and I feel that Tesla will go up. Now this is not looking pretty, but you know, you can always get to here, which is still actually pretty terrible. It's still down. It's still barely made any money over here halfway through, but I think Tesla will go up. Now, as of right now, TSLY with drip, you actually lost more money than if you just kept the dividends, and that is if you bought at the inception, which was in December 2022, or November rather 2022. But yeah, these calculations are pretty crazy. Let's look at the same thing for CONY, because right now it's the best performing stock. If we look down here, this is our basically like calculator. This calculates essentially the returns of CONY price with dividends reinvested for 10 years if you invest 10 grand today. And so it currently estimates, because this is not a full year, that's why we don't have a full year CAGR. Okay, so it basically just takes the distribution, which is last dividend payment, and reinvesting that. And once it's a full year, you will actually have like a price CAGR and a dividend CAGR. Okay, but even now, if there is no NAV erosion, this is pretty crazy returns over 10 years. NVDY, let's look over here. Yeah, even crazier. It estimates that NVDY will return in 10 years like 3,000%. Which is insane at current distribution rate and the price. The price CAGR basically stays the same, because again, we don't have a full year data, so this is only because it's 9.9 year. So once we have a full year data, we can calculate this more accurately. Anyway, so you see all these blank spots because this is not a company, so it doesn't have like revenue, net income, EPS. It's a fund. But if we look at the NVDA, you can actually see, wow, NVIDIA returned 20,000% in 10 years. That is insane. And the dividend is pathetic. It's like 4 cents or 40 cents, 4 cents per quarter. So it's really not a dividend. It's just so you can say it's a dividend. But yeah, look at this metrics. EPS $5. And actually, at that EPS, it was only P of 30. This is trailing P, which is insane. Free cash flow, 11 billion in 1 quarter. Okay, so this is EPS versus free cash flow. Basically, most of the money they make goes as free cash flow, and they can do whatever they want with it. Okay, so wow, insane. Their net income margin is over 50%, guys. This is absolutely ridiculous. So they made 12 billion net income versus 22 billion revenue in last quarter, and the cash pile is just growing. Yeah, look at these returns. 1 year revenue CAGR 265%. Now, soon enough, these numbers will have to compete with with last year, and it's not going to be such crazy numbers, but still 10-year revenue CAGR 35%, that is absolutely insane. EBITDA 10-year CAGR 55%, free cash flow 10-year CAGR 42%, absolutely insane. This company is on crack. But yeah, $900 a share. Now if they can sustain that growth, then yeah, it's a good company. But once the growth starts, the growth, not the revenue itself, but the growth in the revenue, once it starts going down a little bit, because don't forget, like Amazon and Google, and they're developing their own chips, and even Tesla, I think, is working on their own AI chips, so this is not going to be sustained forever. But these numbers are pretty crazy. It's a great company. I was actually shorting it last year. I lost some money on it. But anyway, yeah, so if you keep NVIDIA, and if it continues growing as is, just on the price price increase, because the dividends are basically non-existent. It calculates $24 dividend over 10 years. So if you invest to 10 grand today and it continues growing at the same pace, you will have $1,136,000. Hey, thanks for watching, guys, and if you enjoyed this, subscribe to the channel. Please come back for more, and I'll see you in the next video.